Good evening, everyone. My name is Peggy O'Neill. I'm Chair of Vanguard Super, and I'm delighted to welcome you to the 2024 Annual Member Meeting. I'd like to acknowledge the Wurundjeri Wurrung people as the traditional custodians of the land where I'm speaking to you from this evening. I pay my respects to elders past and present and recognize their continuous connection to country, community, and culture. I extend that respect to all Aboriginal and Torres Strait Islander peoples attending this evening. It's great to see so many members online taking an active interest in your financial future. We're pleased to have this opportunity to update you on how we're working to deliver smart, simple super to help you retire with confidence. We also want to hear from you. Your questions and feedback are critical to help us better support you in the lead up to and during your retirement. We hope you find tonight to be valuable, that you come away more informed about Vanguard Super and empowered about your retirement journey. Choosing the right super fund to grow your super savings and to provide the confidence, security, and income you need when you reach retirement is a significant decision. Delivering on this responsibility is what drives us as trustee. I'd like to introduce my fellow directors. Online are Cynthia Louie, Ann Flanagan, and Robin Bowerman. Robin is our newest director, having joined the trustee board in July, following a distinguished executive career at Vanguard Investments Australia. On behalf of the entire board, I'd also like to express our gratitude to two directors who have retired in recent months, Jeremy Duffield and Colin Kelton. Jeremy and Colin were instrumental in launching Vanguard Super. Their commitment to our mission to deliver better retirement outcomes to all Australians has set us on a strong path. We thank them for their significant contributions over many years. I also want to recognize the Office of the Superannuation Trustee, the leadership team, and our auditor who are here tonight. This evening, Vanguard's Chief of Personal Investor, Renee Smith, will update you on the Vanguard Super offer and member experience. Next, Vanguard's Asia Pacific Chief Investment Officer, Duncan Burns, will discuss Vanguard Super's performance in 2023-24, as well as the market and economic outlook. Then, Sue Wallace, head of the Office of Superannuation Trustee, will facilitate our question and answer session. Our thanks to members who have pre-submitted questions, but you can also submit questions during the meeting. If time runs short, we'll address outstanding questions as part of the meeting materials, which we've made available online in the coming weeks. Yesterday marked 2 years since the launch of Vanguard Super. And while we're relatively new to the market, Vanguard Super draws on decades of local and global investment, superannuation, and retirement experience through the Vanguard Group, bringing significant benefits to our members. Consequently, Vanguard Super is uniquely positioned to grow and protect your superannuation savings through low-cost, expertly designed products for every stage of your working life and your retirement. Our goal is to deliver simple yet sophisticated, low-cost superannuation solutions to maximize your investment outcomes over the long term so that you can retire with confidence. We want you to feel confident that you've chosen the right super fund and that we're working in your best financial interests. I trust that tonight's update gives you that assurance. I want to draw your attention to the Vanguard Super Annual Report for the year ended 30 June 2024 and the Fund Information Booklet. These documents, along with your annual member statement and our annual member outcomes assessment, contain important information for members. If you haven't already done so, I encourage you to read these documents and to contact the Member Services team if you have any questions. Compulsory superannuation is a cornerstone of Australia's retirement income system, supplementing the government's age pension and private savings to help provide Australians with a secure income in their retirement years. Recent legislative changes aim to help Australians maximize their superannuation in retirement. Compulsory employer contributions rose to 11% of earnings in 2023 and will reach 12% by 2025, helping to boost the retirement savings of millions of Australians. Government co-contribution thresholds were increased to support low and middle income earners. The downsizer contribution age was reduced from 60 to 55. And caps for total super balances and transfers of super to pension accounts increased, offering greater flexibility for those nearing retirement. These changes, along with increases to annual caps for concessional and non-concessional contributions, which took effect on 1 July this year, should help bring a meaningful lift to super balances over time. However, when we surveyed Australians this year about their attitudes toward and understanding of retirement, many people had only a patchy understanding of the retirement income system and opportunities within that system to add to their super on top of compulsory employer contributions. And less than a third were confident in their understanding of super products. Given the central role of superannuation in building and managing your retirement income, this is something we at Vanguard Super want to improve. Our vision is to create confidence for retirement through simpler, smarter super. 2 years on from launching Vanguard Super, we're proud of our progress in bringing superannuation products to Australians that are low cost, easy to understand, simple to invest in, and straightforward to manage. Our products reflect the objectives set out in our retirement income strategy to help grow your super over the long term and manage risks as you approach and enter retirement. The execution of the retirement income strategy is supported by crucial work the team is doing to continue to develop and maintain our financial, operational, and cyber resilience, as well as our regulatory compliance. Further, Vanguard Super must always be ready to respond to emerging risks and opportunities. In addition, we continue to engage with government, industry, and the community to improve retirement outcomes for all Australians. Now, let's discuss Vanguard Super's performance and the progress we've made over the past year. Our membership increased by 78% in the financial year 2023-24 to 15,810 members, with $1.4 billion in super savings as at 30 June 2024. This represents a 128% increase in funds under management. As at 31 October 2024, funds under management had grown to $1.9 billion. In our first full financial year, Vanguard Super delivered generally strong investment returns across all products. Duncan will run through these in detail, but I did want to specifically mention our award-winning life cycle product that delivered 13.2% returns to members in the age 47 and under cohort, compared to an industry median of 11.06%. In fact, this investment option outperformed comparable products from some of Australia's largest super funds. While these short-term returns are positive, superannuation is a long-term investment whose performance is best measured in decades, not quarters or years. Market fluctuations come and go, but our focus remains steadfast, delivering long-term investment value so you can retire with confidence. As part of our continued commitment to lower costs over time, we implemented major changes to our fee structure on the 1st of May. We reduced the administration fees across all of our products and lowered the administration fee cap to help maximize your super savings. As you will hear Renee and Duncan explain, fees and costs, along with investment performance, have a significant impact on your super balance at retirement. Our efforts to deliver low-cost, simpler, smarter super have not gone unnoticed. Vanguard Super's lifecycle investment option was named Money Magazine's Best Value Super Product and Best Value My Super Product for 2024. And in May, Vanguard Super was named Best Superannuation Retail Fund 2024 at the Australian Wealth Management Awards. These awards serve as an important and independent recognition of the positive impact Vanguard Super is making across Australia's superannuation sector. Another milestone for Vanguard Super, in December 2023, we launched 2 pension products, Vanguard Super Transition Smart and Vanguard Super Spend Smart. We're excited to now support you not only while you're working, but also throughout your retirement journey. We also completed our first members' outcome assessment. This is a detailed self-assessment required by APRA, where we compare ourselves to other super funds across prescribed assessment factors to determine whether the financial interests of our members are being promoted. Our assessment demonstrated that our MySuper and Choice products clearly promoted the best financial interests of our members. We are pleased with our progress over the last 12 months, but acknowledge that there's still work to be done. We value your continued feedback to help us better support you in achieving security in retirement. Thank you for your attention. Next, Renee will talk to you about the member offer and experience, and then Duncan will talk about our investment performance. After that, we'll take your questions. Thank you, Renee.
Thanks, Peggy, and good evening, everyone. My name is Renee Smith. I'm the Executive responsible for Super at Vanguard Australia. For many people, superannuation is their biggest financial asset and often their first or only investing experience. So managing your super is both a privilege and a responsibility we don't take lightly at Vanguard Super. Tonight, it's my pleasure to share with you some of the enhancements that we've made to our super offer and experience as we seek to create confidence for retirement through simpler, smarter super. Firstly, I'd like to spend some time talking about fees, which are an important part of any super offer. Fees are important because they can have a big impact on your super balance at retirement and your income during retirement. But unfortunately, we know that 60% of Australians find their super fees confusing and wouldn't feel confident explaining the fees that they're charged. Nearly 40% don't know if their super fund is low cost, and almost 2 in 3 Australians aren't even aware that their super fund is charging multiple fees. These stats are not surprising because while there are rules around product disclosure documents for super funds, when it comes to how super fees are disclosed and advertised to consumers, there's no consistency, which makes it hard for people to select the best super fund for their circumstance. This is why right from the start we set out to design Vanguard super fees to be simple, transparent and competitive. Simple and transparent by presenting a total fee on a yearly basis, which incorporates the investment costs, administration fee and transaction costs to give you a much clearer picture of how much you're paying for your super. And we're competitive on fees. We're committed to low cost investing to help maximise your overall investment outcomes. Which is why, after just 18 months in market, we were pleased to pass on a fee reduction to Vanguard Super members in May this year. As Peggy mentioned, we lowered the administration component of our yearly fee. This reduced the headline yearly fee for most of our products from 0.58% to 0.56%. We also lowered the administration fee cap from $850,000 to $300,000. For most of our products, this brings our yearly fee down to 0.28% for the portion of your balance that is over $300,000. So what does this mean for your super? Let me use our MySuper Lifecycle product as an example. If you're 35 years old with a super balance of $150,000, this fee reduction alone could help boost your super at retirement by around $17,000. If you're 50 years old with a balance of $500,000, you could add around $22,000 to your super balance at retirement. I think this really illustrates the power of small changes in fees compounded over time. Our Lifecycle product is one of the lowest cost MySuper products in the industry. In fact, fees for Vanguard Super's Lifecycle age 47 and under option are 30% less than the industry average. I encourage you to go to our website and see how Vanguard Super MySuper Lifecycle fees stack up against similar options from other funds. You can also enter your super balance into our online calculator to estimate your yearly fee on the spot. Actually, another handy resource is the Australian Tax Office, their independent Your Super comparison tool, which compares MySuper products across the super funds, both by performance as well as fees. So, why so much talk about fees this evening? Well, that's because fees matter. Every dollar in fees is more than $1 out of your future returns. And when you compound that over the length of your working life, that can become a sizable amount, which is why we support greater transparency when it comes to super fees. We'd like to see rules being introduced around low-cost advertising, increased awareness of the ATO's Your Super comparison tool, and a shift towards funds presenting transparent combined fees rather than highlighting one type of fee, like their admin fee, for example. Super fees should be easy to find, easy to understand, and easy to compare so that you can make informed decisions about your retirement future. Helping you make informed decisions about your super is core to our member experience. This year, we launched our Learn Centre on our website. This offers general information about super through to specific topics like tax and super, to thought leadership such as our annual How Australia Retires study. We're also working to bring information directly to you through personalised member communications. Our June campaign about maximising your concessional contributions before the end of financial year is a good example of this. Your feedback on our member experience helps us create more positive interactions for all of our members. When our members call us, they're rating us about 9.5 out of 10. But we know many of you like to engage with your super through our digital channels, whether that be our web portal or our mobile app, which is why we continue to focus on building great digital experiences based on member feedback. For example, your number one requested enhancement was an easier login for mobile app using fingerprint and facial recognition. So we've added this to the mobile app now, and the majority of our app users are using this functionality. Your next most requested enhancement was visibility of your personal super performance. So your personal super performance is now available in your Vanguard online account dashboard to make it easier for you to track and manage your super. The mobile app shows your investment returns for the current financial year, whilst the web portal shows your investment returns plus further information both for the current financial year as well as for prior years that you've been with Vanguard Super. As always, we welcome your feedback as we continue to refine these features. Now, insurance is another important part of our super offer, and we have taken steps to make it easier for you to engage with your insurance by digitising the insurance application, management and claims experience. We've also added some new website tools to help you calculate your insurance needs and also estimate the costs. Another area of focus in our member experience is helping you prepare for retirement so you can be retirement ready. That's why we've developed Future Forecast, which is a tool now available on the mobile app. Future Forecast, it uses your existing data from your Vanguard Super profile, like your balance, your age and your investment mix, and then requests some additional information from you. Things like your annual salary before tax, your regular contributions, including compulsory contributions and anything on top of that. What age you'd like to retire, how long you would like your money to last in retirement, your home ownership status, and enables you to also add a partner to the projection with their equivalent information. With this information, we are able to forecast your future super balance at retirement, as well as how much you could withdraw from your super each year in retirement without running out. It also lets you explore how making extra contributions to your super today can affect your future retirement balance and income. I encourage you to log into the mobile app and explore the tool to help you start planning for the retirement you want. I'd like to conclude by thanking you for trusting Vanguard Super with your super. In a recent study of our members, 62% reported feeling highly confident about their retirement. This compares to our How Australia Retires study, which surveyed a nationally representative sample of Australians and found that only 39% of retirees and 27% of working age Australians reported feeling highly confident about their retirement. We're encouraged by these results, but there is more to do. And we hope that you'll continue to engage with us and with your super so we can keep learning from you and your experience and keep listening to your feedback, because it's your feedback that really fuels our work and our vision to create confidence in retirement through simpler, smarter super. Now that's all for me for now. I'm now going to hand over to Duncan for an investment update.
Hi, I'm Duncan Burns, Vanguard's Chief Investment Officer for the Asia Pacific region. Thank you for joining us this evening. It is a pleasure to be here with you. I lead Vanguard Australia's investment management team of approximately 60 investment experts who look after 1.9 billion for Vanguard Super. And that's part of 1 trillion Aussie dollars that the Vanguard Group has invested across Asia on behalf of everyday investors and members like yourself. Tonight, I'm going to be covering 4 things for you. First, the power of indexing. Second, how we've designed Vanguard Super's flagship lifecycle product. Third, I'll reflect on the performance of our super funds in full year 2024. And fourth and finally, I'll talk to Vanguard's outlook on the markets and the economy. So let's start with the power of indexing. We are proud that Vanguard founder Jack Bogle pioneered indexing by launching the first retail index mutual fund nearly some 50 years ago. Since then, the index revolution has taken off, with market share of indexing approaching nearly 50% of all funds invested in the US, sitting somewhere between 30 and 40% in Europe. And here at home in Australia, indexing accounts for just under 25% of assets under management. Indexing has and continues to be a core tenet of the Vanguard Group's investment philosophy, with over 80% of our total assets across the globe invested in index funds and ETFs. It's a key driver behind our clients' and our members' success, and one of the main reasons Vanguard has grown into the world's second largest asset manager. So what is indexing? In short, index funds and ETFs are investments built to track the performance of an index or target market. For instance, the Vanguard Aussie Shares Index Funds tracks the performance of the ASX 300, while our International Shares Index Fund tracks the performance of the MSCI World ex-Australia Index. And broadly diversified index funds and ETFs generally provide exposure to a wide range of securities, allowing investors to diversify with a single purchase, rather than individually buying, say, the top 300 securities on the ASX. Our founder, Jack Bogle, captured the index fund's appeal nicely when he said, "Don't bother looking for a needle in the haystack, just buy the whole haystack." And indexing is one of the simplest ways to invest, and probably one of the smartest ways to invest too. So if you're invested in a good index fund, congratulations. Over the longer term, 5, 10, or 15-year windows, you've likely outperformed 80% of active funds tracking those same benchmarks. And this data is verified by our friends over at the index provider Standard & Poor's in their SPIVA report, which has been measuring actively managed funds against their index benchmarks worldwide for close to 2 decades. And numbers tell us a compelling story here. Most active managers underperform their index benchmarks most of the time. And again, that's a compelling and enduring case for index investing. It's not that active funds can outperform, it's that on average, active can outperform. So what's the secret sauce behind indexing's edge? It's cost. All investors are subject to the costs of participating in the markets. These costs include things like management fees, salaries, bid-ask spreads, commissions, market impact, and even taxes. These costs can be high, and they absolutely reduce investor returns over time. Importantly, the aggregate result of these costs creates a hurdle that must be overcome in order to beat the market averages. The higher the cost at your investment manager or your super fund, the higher the odds of market underperformance. In fact, a great investment manager or super manager can easily turn into a really bad one simply by cranking their fees up too high. Index funds and ETFs, however, can deliver the market return reliably and at very low cost. So going index starts to look really compelling, right? Every dollar we save you in cost is a dollar more in your retirement fund, right where it belongs. And those savings compounded over the years can be significant and can be the difference between being able to retire early or having to work an extra few years to retire comfortably. And that's why we build the core of our Vanguard Super Fund lineup with index funds. Which brings us to our flagship lifecycle super option. Vanguard Super's lifecycle option is a result of our best global investment thinking, customized for Australian members like you. Based on an approach known as a target date fund, which is structured to match a typical investor's risk tolerance through different stages of their life. The lifecycle option uses a long-term portfolio de-risking process, generally known as a glide path. And the true goal of a glide path is to maximize your chances of achieving retirement success. So we're gradually selling equities and buying bonds to take some risk off the table and defend capital as you age, with the aim of hitting your long-term retirement spending and lifestyle goals. I like to picture a super glide path as a plane coming in for a nice, soft, gentle landing at the exact point you want on the runway. Let's take a look at a slide here. Here's what the Vanguard Life Cycle Glide Path looks like. And to orient you to the slide, the x-axis is age, and the light green shaded area represents growth investments like stocks, and the dark green is defensive investments like bonds. And you can see how we de-risk by selling stocks and buying bonds up to and right through retirement. Our glide path stands in a class of its own in the Australian super sector as one of the few products currently in market that's highly personalized with 36 separate age cohorts, much higher than the industry average of just 11 to 12. So what's this mean for you? If you're a member age 47 and under, the fund's asset mix is focused on growth with a blend of 90% shares and 10% bonds. Then from age 47 to 82, we'll adjust the asset allocation every year right after your birthday to de-risk slightly by gradually reducing your asset allocation to shares and buying bonds. And that's making your portfolio more conservative as you get closer to retirement. Then from age 82, the asset mix is set to its most defensive posture. That's 40% shares and 60% bonds to help ensure your super lasts and is there to support you all the way through your retirement years. And all this is done automatically for you without any additional effort or admin on your part. It's important to know that the goal of this glide path activity is to maximize retirement income while reducing sequence of return risk. To explain sequencing risk, it's the risk that your super savings will be subject to the worst returns at the worst possible time. That's the years surrounding your retirement. And it has an outsized impact, particularly in the years when you move from building your nest egg to spending it. Imagine if you were 100% in shares and needed to retire just as the GFC hit, or more recently in 2020 or 2021 during the COVID-19 pandemic. The life cycle option is designed so that swings in the market don't throw you and your asset allocation off course, which ultimately means greater retirement confidence for you. So while investing can seem perplexing and complex, rest assured we're doing everything we can to make it as simple as possible for you and deliver you the best chance for investment success. Let's turn to performance. I am happy to report that Vanguard Super delivered pleasing results for our members in the first full financial year. As Peggy mentioned, Vanguard Super's default MySuper Lifecycle investment option delivered strong returns of 13.2% to members age 47 and under, placing members in this investment option ahead of the industry median or middle number. The high growth, and ethically conscious growth investment options delivered 13.18%, 10.60%, and 12.23% respectively, while the balanced and conservative investment options returned members 8.11% and 5.86% in the same period. At Vanguard, our focus is on delivering long-term, steady investment value to our members and clients. And while this is only a one-year track record, these results really validate the strategy and investment approach. While investment performance absolutely matters, I want to bring your attention back to the importance of fees and costs. As Renee alluded to earlier, small differences in fees and costs do impact your investment returns, which is why when you're comparing performance across super funds, it's important that investors should look at net return. And coupled together, investment performance and fees are the key factors that are going to materially impact your superannuation balance as you near retirement. And it's early days yet, but we are confident that our investment strategy and low fees are going to continue to deliver benefits for Vanguard Super members in the years to come. Looking ahead here, We're going to move to our Q&A section shortly, but before we do, I have a few comments on what the market and economic outlook is and what we're expecting here over the next decade. The war in Ukraine, tensions in the Middle East, China's economic slowdown, the Magnificent Seven, megatrends like AI, easing inflation and interest rates, all these topics have dominated the headlines for much of 2024. Members are likely to be wondering, how will these factors impact my superannuation balance? How should I invest differently in 2025 in response to these factors? Well, the truth is, when it comes to investing, it's nearly impossible to predict short-term market moves, and 1 year or less is a very short period of time. And for that reason, Vanguard's investment think tank, our investment strategy group, takes a slightly different approach than most. We tend not to make a plant your flag prediction about where the markets will be in a few months or a year from now. From our perspective, that's a fool's errand and can lead to costly overtrading. And here's an example of why. The Economist magazine is, in my opinion, one of the most astute financial publications out there with its sharp-thinking contributors and writers. And every November, they publish an Economist The World Ahead edition with predictions around economic and investment risks that are going to impact the markets over the coming 12 months. Well, I was looking back at some recent editions, and guess what? The 2020 edition, it had nothing to say about COVID. While the 2022 edition didn't foreshadow anything about the war in Ukraine. And in 2023, no one was predicting the banking crisis in the US or tensions in the Middle East. And short of being able to predict the future, no one would have known that these events were about to change the world and our markets. So what's the takeaway? It's that the biggest economic risk for 2025 is probably something that no one, not even the most astute financial minds, are talking about yet. It's probably going to be a surprise. And in practical terms, it's not that Vanguard can't forecast the short term precisely. It's that really no one can. And so with that in mind, our long-term forecast, that's 10 years and out, are looking like this. Our expected returns for the next 10 years for Aussie equities are in the range of 4.7% to 6.7% range, while unhedged global equities are in the 4.3 to 6.3% range. And the outlook for fixed income returns continues to be strong, supporting Vanguard's belief that bonds are back. And we anticipate that investment-grade bonds are in the range of 4.1% to 5.3%, depending on whether you're invested in Australian or global bonds. And we provide these ranges in the hopes that members use this information not to think about timing the markets, which is notoriously difficult to do, but rather to use this information to construct and prepare your portfolios robustly for the long term and the many possible futures and market conditions that lie ahead. And while this long-term, data-driven, range-based approach might come across as kind of boring, and certainly unlikely to grab headlines, we find it serves the objectives of our clients and super members so much better. And it's the key to helping you achieve your long-term retirement goals. In closing, I hope that's provided you insight to our strong and steady strategy behind your Vanguard Super Fund and how we're working to help you retire well and with confidence. The power of indexing, the strength of our life cycle glide path, they're there to maximize your chances of achieving retirement success. Thank you, and I look forward to providing similarly positive news and updates at next year's annual members meeting. And now, over to Sue and the panel for some Q&A. Thank you.
Good evening. My name is Sue Wallace and I'm the head of the Office of the Superannuation Trustee. I'll be facilitating tonight's Q&A with our panel, Peggy, Renee and Duncan. Thank you to our members who submitted questions to us prior to the meeting. And of course, you can still submit questions tonight via the Q&A chat box on your screen. We'll answer what we can tonight and we'll address outstanding questions on our website in the coming weeks. We'll also publish the minutes and a recording of this meeting. I want to note that we are unable to answer questions which would require us to disclose personal or confidential information. We also recognise that some of our members may hold Vanguard investments outside their super account. We're here to assist members with questions about their super tonight. So for questions relating to other investments you may hold with Vanguard or questions of a personal nature, we encourage you to contact our client services team. So let's get into it. Peggy, we've had a few members ask questions about our growth strategy and how we plan to increase members and also compete with larger funds in the industry.
Thanks for that question. I mentioned earlier this evening that our membership has increased substantially in financial year 2023-24 to 15,810 members. And as at 31 October 2024, Australians have entrusted us with 1.9 billion of their superannuation savings. That's up from 1.4 billion at 30 June 2024. So we're growing steadily on both fronts and never lose sight of the fact that each new member and dollar contributed represents the trust that person has put in Vanguard Super to deliver for their retirement. And we're continuing to evolve our member experience and offer to support that growth with the aim of creating confidence for retirement through simpler, smarter super. We're working to bring this to life in a couple of ways. One stat you may have heard is that around 2.5 million Australians are expected to retire in the next decade. That's a lot for people who will be making the exciting but big life change to retirement and who will be looking to their super savings to help support their income in retirement. So in December last year, we launched 2 pension products, Vanguard Super Transition Smart and Vanguard Super Spend Smart. This rounds out our offer to support Australians for the whole journey, so to save for their retirement, make the transition to retirement, and draw a regular income once fully retired, meaning we're here for our members every step of the way. And we've talked a lot about fees tonight. Duncan and Renee both talked about the difference a change in fees can make to your super balance and retirement income, which is why we're pleased to pass on a fee reduction to members last May across every account to help keep more of your super in your account to maximize your retirement outcomes. But we're still relatively new to the market, and we've got some work to do to introduce Vanguard Super to more Australians and show them the strength and expertise of our super offer and member experience, which is built on decades of experience in investments, super, and retirement here in Australia and globally. We're pleased with how we're growing, and we continue to explore opportunities to help get the message out about Vanguard Super, what we stand for, and how we're supporting our members to achieve their retirement goals.
Thanks, Peggy. Duncan, this one is for you. How do you think Vanguard's life cycle product will perform against more aggressive Australian and international share allocations without defensive fixed interest?
Well, the answer there is it depends really on your time horizon, but that's not a very satisfying answer, so let me expand. Whilst a 100% equity option will likely outperform in the long run, it comes at a higher risk, which is particularly important as one nears retirement. And when we think about the role of fixed interest from an asset allocation perspective in a multi-asset super portfolio, it's helpful to start with, why do I hold some stocks and why do I hold some bonds? And it usually comes down to this. First, I own some stocks because they give me the equity risk premium and reward me in the long run so I can grow my dollars faster than inflation and I can fund my long-term retirement spending goals. And second, I own some bonds because stocks are volatile and can be gut-wrenching when they occasionally have a big drop, and sometimes I need money when my stocks are down. So I've got some bonds there to smooth out that journey and act as ballast that balances out my stock holdings. So bonds are the diversifier to your return driver. Bonds are the diversifier to your stocks. And when I think about the life cycle product versus 100% shares allocation part of the question, it reminds me of a recent conversation. I have an elderly in-law, Uncle Stu we call him, and he's about 80 years old in a home, and he is really switched on and loves talking about markets with me and his mates. And a couple years ago, I was visiting, and he complained to me that his buddy next door earned 12% on her portfolio that year, and Stu only picked up some 9%. And he was upset with me, like, Duncan, what's the deal? You told me this glide path thing was good. I said, hang on, Stu. You actually had a brilliant year. And remember what we're trying to do here with your retirement goals and your glide path. The glide path goal is not to maximize wealth. It's to maximize the chance of retirement success. That's why you hold some stocks and some bonds. If you want to try to maximize returns, go 100% equities. But that's going to give you chest pains, and that's way too risky for most, especially at your age. So this glide path move, gradually shifting into bonds, is aimed at maximizing your chances of long-term investment success and hitting your retirement spending goals. You own some bonds to manage risk, pick up steadier returns, take some chips off the table, and defend capital and clip a little yield along the way so you can stick to your investment plan and not get blown off course. I love sharing that story because it really helps shift the conversation from being 100% about performance and brings risk into the picture as you think about your retirement goals.
Thanks, Duncan. What a great story. Thanks for sharing. We've had a few questions come in on personal performance. Renee, one member recalls that last year we mentioned a dashboard showing live performance for each fund, and they're hoping to see a more detailed summary to understand contribution versus uplift year to date. And on a similar topic, another member has asked if the online experience will be improved to provide better real-time data on information on individual asset performance within one's portfolio.
Thanks, Sue. Yes, improving visibility of our members' super performance is something that we've been working on throughout the past year. I mentioned earlier, your account performance is now available on your Vanguard online account dashboard to make it easier for you to track your account growth. The mobile app shows your investment return as a dollar figure for the current financial year, whereas the web portal offers a more comprehensive view of your account, including your investment dollar return, but as well as your contributions, any rollovers from other funds, withdrawals, insurance premiums, government taxes, and of course your Super Vanguard fees. Performance of Vanguard Super investment options is currently available through our public website by clicking on Performance and Fees and selecting Performance from the drop-down. This provides a view of performance for each investment option. It's presented as a percentage with a view of since launch, then for 1 month, 3 months, 6 months, and a full year. We know being able to easily access this information is important for members, and as always, we'd welcome your feedback on how we can further refine this.
Thanks, Renee. Another topic that's topical in the media at the present actually is another member's asked us if we have any plans for Bitcoin funds. Duncan.
Thanks, Sue. Cryptocurrencies, including Bitcoin, certainly have attracted a great deal of attention in recent years and in just the last week. But it is Vanguard's position that they don't appear to have an enduring investment merit when it comes to serving the long-term needs of investors. So we currently have no plans to introduce options that invest in crypto. And let me expand on that a little bit, the why behind it. First, you should consider that when you invest in the share market or in bonds, you're essentially investing in the future earnings of a company, or in the case of bonds, a borrower's ability to pay back a debt obligation with interest. On the other hand, most cryptos, unlike shares, bonds, or even property, they don't produce any cash flows for investors. There's no dividends, no interest payments, no rent payments. And the second key factor to consider is around valuations. To evaluate an investment case for any asset, one needs to assess its fair market value. And this is often done by analyzing discounted future cash flows. But cryptocurrencies don't generate any cash flow. They can't be objectively valued, and therefore their trading prices are purely speculative. And when it comes to valuing, the best one can do is hazard a guess there. And as exciting as crypto may be, guessing is never good enough when it comes to your long-term nest egg. And for most investors, adding crypto exposure would mean reducing allocations to traditional asset classes with demonstrated long-term investment credentials. So I'll stop there.
Thanks, Duncan. We've had a couple of questions about how Vanguard Super has performed compared to the industry. One member said they read that Vanguard was the top performing retail super fund last year, while another member asked about our performance and cost versus top ranking Australian super funds. Peggy, could you talk to these questions, please?
Okay, well, we've already discussed tonight the important role both performance and fees play in helping you to achieve security in retirement. And while it's early days, we are pleased to see that our approach to low-cost, smart investing helped to deliver strong returns for our members in financial year 2023-24. That year marks Vanguard Super's first full financial year since the fund launched in November 2022. And to build on what Duncan said earlier, a single financial year is a brief period in the context of super savings and investments where performance is better measured in decades, not years and months. So it's important to note that while there were strong returns for members last year, as Duncan mentioned, markets have to weather many cycles, and annual results don't necessarily reflect our long-term outcomes. And to your question, Vanguard Super's options were among the best performance in the financial year ended 30 June in multiple categories. This included the Vanguard Super Save Smart High Growth and Vanguard My Super Life Cycle Age 51 options, ranking second and third respectively in the industry rankings by super ratings. And while these indices include a number of retail super funds, Vanguard Super did not outperform all retail funds across all investment option categories during the period. But we know, as we've said, superannuation is a long-term asset, so we don't get too attached to annual returns and remain focused on delivering long-term investment value so our members can retire with confidence. We've also spoken about fees a lot tonight, and that's because, as powerfully illustrated, fees can have a big impact on your super balance in retirement and your retirement income as well. We reduced our fees in May 2024, which means you keep more of your money in your super account to work your returns harder. Pleasingly, some of our best performing options last financial year cost our members less than the industry average total cost on $50,000 balance. Moreover, we're pleased with our progress over the past 12 months to build out our super offer and experience to provide low-cost, simpler, smarter super to help members retire with confidence.
Thanks, Peggy. We have talked a bit about performance and fees, and there's another question here on fees, which is an important topic. And a member has asked why our fees are high.
I think I thank you for that question. Actually, our lifecycle product is one of the lowest cost MySuper products in the industry. But we understand it might be hard for people to recognize that. And while regulatory guidance requires super funds to disclose fees in a uniform manner in product disclosure statements and MySuper dashboards, as Renee talked about tonight, there's a lot of variability in the industry and how super fees are marketed to Australians, whether on websites, ads, social media. And that can make it tricky for people to understand how much they're paying in total for their super each year and how that compares to other funds. At Vanguard Super, a lot of thought has gone into how we present our fees to members to reflect our goal to provide you, the member, with simpler, smarter super that's competitive and transparent on fees. In all our communications, we present total ongoing annual fees and costs as a yearly fee that incorporates the investment costs, admin fees, and transaction costs applied to your account each year. We think that gives you a clear picture of how much you're paying for your super. As I've said, we launched in 2022 with a competitive low-cost offer where our yearly fee across most products was 0.58%. And as we've spoken already, in May this year, we were able to reduce the yearly fee across most products from 0.58 to 0.56%. And the result of this fee reduction, the yearly fee for our MySuper Lifecycle option is among the lowest in the industry across a range of ages and balances.
Thanks, Peggy. Perhaps now one for Renee. Renee, a member has inquired if Vanguard Super will provide access to a wider range of asset classes for members who wish to be more hands-on with portfolio management. And a second part to that, will it be possible to invest in ETFs managed by Vanguard in the future?
Thanks, Sue. Our life cycle and diversified options are designed with Vanguard's best thinking and offer our members access to a diversified investment portfolio at a low cost in a single product. For members who want to be more hands-on and design their own diversified portfolio, we enable them to do this through a combination of our single sector options. We're feeling good about our product lineup. At this point in time, there's no plans to extend Vanguard Super's investment menu or to offer ETFs.
Thanks, Renee. I might just stay with you for this next question, which is also on fees. Another member has asked about a fee reduction to be more in line with the fees charged for these ETFs. For example, they have said the Australian Shares Super Fund fee is higher than the ETF management fee.
Thanks. I'm glad this question has come up because it does come up quite a bit, and so I appreciate the opportunity to answer this. The pricing of funds and their associated fees, whether they be ETFs, managed funds or super funds, they're influenced by a number of factors. These include the complexity of the underlying product and investment options, the operating costs of the fund, the scale of the fund and its ability to deliver cost efficiencies, and the competitive nature in which it operates. We have spoken tonight about the sophisticated nature of our super product and investment options, which were specifically designed for Vanguard Super. A super fund also incurs operating costs and has regulatory requirements that are unique to super funds and don't apply to other funds like ETFs and managed funds. So with that in mind, you can't really compare a sophisticated, diverse super solution to a simple single sector ETF. But we do encourage our members to compare our fees with other super funds. It's important to consider the total yearly fee, inclusive of the administration fees, the investment fees and costs, and any transaction costs, and to, of course, consider the quality of the investment solution being offered.
Thanks, Renee. Duncan, I think I've got a good one for you. A member has asked about Vanguard's global expertise and if there is a Vanguard product outside of Australia that is similar to Lifecycle that could be used to assess and gain more confidence in the long-term performance for Vanguard Super's Lifecycle. They've also asked what is your opinion of Q Super guaranteed pension product and can you make a comparison with Lifecycle?
Thank you, Sue. I can grab part of that question, and I'm not an expert on Q Super's guaranteed pension products, so I'll have to pass on that part of it, but I can absolutely talk about Vanguard Super and the expertise that has shaped our Lifecycle product. To recap, our Lifecycle option utilizes a glide path which automatically adjusts its investment mix according to each member's age. So from age 47 to 82, we'll adjust the asset allocation every year right after your birthday to de-risk slightly by very gradually reducing your asset allocation to shares and buying bonds, making your super portfolio more conservative as you get closer to retirement. And the smarts behind our Lifecycle product has evolved from Vanguard's target date fund lineup in the US, which has an enviable almost 20-year track record and in excess of $1 trillion in assets under management. As I mentioned earlier, the Lifecycle option is designed so that swings in the market don't throw your asset allocation off course, which ultimately means greater retirement confidence for you.
Thanks, Duncan. I have another question for you. A member has allocated their super in international shares and would like to know where exactly Vanguard Super has invested in internationally, and is there a list of companies they can access, please?
Great question, and I love to see the members getting into the details here. We aim to provide clear product information to help members make informed investment choices that align with their financial goals and personal preferences. And the International Shares Hedged option provides low-cost access to broadly diversified range of some 1,300 plus shares listed on exchanges of the world's major developed economies. And members can get or review a full list of the portfolio holdings there on our public website. And I'm going to ask the team to drop a link in the chat room here as we go. The data in these files is updated twice yearly, and there is also a product fact sheet available on our website, which shows the top 10 holdings in each fund and the country weights if summary info is more helpful. And as we close this out, just a reminder to all, it is really important to read the product disclosure documents before making investment decisions, and I love the question here. Thank you.
Great, thanks, Duncan. Switching back now to you, Renee, a member has asked when will we have the capacity to move pension funds directly across to Vanguard Super from another fund without the money having to go through a single super fund?
Yeah, we continue to look for ways to improve both our offer and our member experience, and this is certainly one of those areas that we're looking at. We're currently working towards having the capability to allow members to move their pension fund from another fund direct into Vanguard Super's pension offer. We're still in the early planning stages and don't yet have firm timings, but we'll certainly keep our members informed and updated as this becomes available.
Thanks, Renee. Just on this important topic of members who are near or already in retirement, Peggy, a member has asked what suggestions we have for people who would like to learn about the options and prepare for a transition to retirement.
It is an important topic. Our public website has some great resources for members with new topics published in our Super Learn With Us pages regularly. Vanguard also has a weekly newsletter, Smart Investing, that anyone can subscribe to, and that covers a range of super and retirement articles, along with general investment and finance topics. But remember, when considering your options, we have 2 retirement products, including our Transition Smart Account that works alongside the Vanguard Super Save Smart Account, which is your accumulation account in the fund, so you can continue working and make contributions while drawing down part of your super. Or there's our Spend Smart account, which is our account-based pension, which gives you flexible access to your super if you're over 60 and changing jobs, over 65 and still working, or if you're fully retired. And you can choose how your money is invested and how you're paid. To learn more about retirement options, you can visit our website, and again, we'll drop a link in the chat to those pages.
Thanks, Peggy. A member has asked if the age-based investment portfolio mimics the high growth, balanced options, etc., according to how far a person is from retirement. Duncan, you've spoken a lot about the life cycle product tonight, but could you expand on this point further, please?
Sure. The life cycle age 47 and under cohort invests in 90% growth assets like stocks and 10% bonds, matching the growth profile of our high growth option. And do note that the allocations in each asset class differ very slightly. I want to call it the main difference between the life cycle strategy versus the diversified options, such as high growth, balanced, and conservative, is the asset allocation for life cycle is dynamic and changes gradually as you age, whilst the diversified options are static. For example, high growth will invest in 90% growth assets and 10% bonds, regardless of your age. So with life cycle, from age 47 to 82, we'll adjust that asset allocation every year right after your birthday, de-risking slightly, again, very gradually reducing your asset allocation to shares and buying bonds, and making your portfolio more conservative as you get closer to retirement. And then from age 82 on, the asset mix is set to its most defensive posture there, 40% shares, 60% bonds, to help ensure your super lasts and is there to support you all the way through your retirement years. And all this is done automatically for you without additional effort or admin on your part. So maybe just to recap here, if you tend to be hands-off, our life cycle product with the glide path is where we adjust your strategic asset allocation every year, and we also rebalance back to target when the markets move. That could be a great fit for you. On the other hand, if you prefer a hands-on approach, our diversified options there and single sector options give you the ability to customize. With diversified options, you select your desired static strategic asset allocation, and we'll rebalance back to that target when markets move. And with our single sector options, you can access fixed exposures to complement your portfolio or customize to fit your unique needs.
Thank you, Duncan. We've had a few investment questions. Peggy, a member notes that there are 6 options available within our single sector investment menu and has asked if we are planning to add additional options in the future.
Well, at present, we have no plans to extend the list of Vanguard Super's single sector options.
Yep, currently. Thank you. Renee, I'm going to pass to you for this one. What new features are planned for the future of Vanguard Super members?
So thanks, Sue. Our focus is on helping our members manage their super and prepare for retirement so that they can retire with confidence. As I Mentioned earlier, we launched the Future Forecast tool in the mobile app recently, which gives you a view of your forecasted super balance at retirement and your potential income during retirement. We've also added personal investment returns to give you a fuller picture of your account growth, and expanded our solutions also to help members who need insurance assess their needs. So we're currently focusing on optimising our mobile app and our web experience based on member feedback. And our goal, of course, is to continue to deliver an even easier, more intuitive and richer digital experience for you so you can manage your super.
Thanks, Renee. While we're on the topic of digital experience, a member has asked if all individual transactions that occur on their account can be clearly and cleanly displayed.
So our goal, of course, is to provide transparent view of all of your account transactions. Account transactions are itemised in your online account dashboard and also in your annual statement. But as always, we'd welcome any feedback or suggestions on how we can better display this information.
Thanks, Renee. Duncan, I've got a question about the markets, and can you assist with this? With growing economic uncertainties and market volatility, what proactive measures is Vanguard taking to ensure consistent returns for super account holders? And how is Vanguard adapting its investment strategy for young investors like my kids who have longer time horizons? So a bit of a two-part question there.
All right, thanks, Sue. Yeah, there are two parts to that question, so I'm going to break them up. First, Vanguard Super's investment approach does not try to predict short-term market moves and proactively position the portfolio. Instead, we build your super fund for the long term with a strategic asset allocation approach, and here's why that's important. Academic and industry research has consistently shown that your asset allocation, or simply the mix of assets in your super fund or portfolio, is by far the greatest determinant of both total returns and return variability over the long term. In other words, how much of your investment is allocated towards different assets, such as shares or bonds, should be the main focus, much more so than market timing or stock picking, which I view as distractions in the business of building long-term wealth. And there are two primary approaches when it comes to constructing and maintaining a multi-asset super portfolio. There's strategic asset allocation, or SAA, and then there's tactical asset allocation, or TAA. And strategic asset allocation involves setting target allocations across various asset classes and rebalancing the multi-asset portfolio regularly to stay close to the assigned allocation, or what I like to call home base, through all market conditions. And this is a stable, robust portfolio built to ride through multiple market cycles, and it uses diversification to mitigate risks. And we believe this is the most effective way for members to harvest long-term returns from the market, and it works for most. And the key there is to have an asset allocation that aligns with your risk appetite and enables you to stay the course and handle the inevitable market rises and falls. Now, turning to tactical asset allocation and that approach. On the other hand there, that's encouraging a super portfolio asset mix based on short-term market forecasts and adjusting the portfolio as you go. And predicting markets is much easier said than done. Facts and data show it's just really hard, and even amongst the pros, only a few actually get it right. Most headlines you're reading today, it's about what's hot in the market today or tomorrow, what you should do right now, and buy this, sell that, and that's how the finance industry makes money off you. But most of the time, today is not that important in the grand scheme of things, especially when you're thinking about 20, 30, or 40-year retirement portfolio. Over the course of your lifetime, it's the asset allocation decisions you make and you stick with that are going to drive the success of your super. So keep it simple. Great super does not have to be complex or hard. So stay the course, as we say here at Vanguard. The second part of that question, Sue, let me get to that. Was how does Vanguard Super adapt to young members? And Vanguard Super's life cycle option automatically and gradually reduces the level of risk in a super portfolio as you age. So why is this and why is it important? The conventional view is as you age, you want to take less risk and you take your equity exposure down over time. And in the old days, decades ago, the rule of thumb was own your age in bonds. So if you're 50, you should have 50% bonds and 50% equities. If you're 70, you should own 70% bonds. And the bond exposure creeps up as you age, and you're going to own less equities in time. Well, Vanguard's life cycle product is a modern, more sophisticated twist on this idea. It's an age-based target date fund constructed up to and through retirement using modeling we've developed with 20 plus years of global experience in the space. And it starts at 90-10 split between stocks and bonds right up to age 47, and that's going to be great for those younger members. And then on the day you turn 47, the portfolio gradually shifts to bonds right through to age 65, where it hits a 50-50 at that point, and then more slowly drifting down to 40-60 stocks bonds by age 82. So we got 36 separate steps there, de-risking incrementally every year on your birthday and rebalancing back to your glide path every time the markets move materially. So that makes our life cycle option powerful and effective for kids and adults alike.
Thanks, Duncan. A member has asked how they can use Vanguard to its full potential as a normal everyday citizen, investing part amounts fortnightly. Peggy, would you like to start with a response to this question?
Oh, that's a great question. I think it's something we've all thought about how to maximize super. Well, I think on top of the contributions you receive from your employer, you can also help your super grow by making your own regular personal contributions. And this can be in the form of pre-tax contributions, such as salary sacrifice, or contributions from your post-tax pay. And these additional contributions will be invested as you have already instructed to help grow your super balance. And they may be able to reduce the amount of tax you pay if you claim a tax deduction. But you can learn more about all of this on our website by visiting our Learn With Us pages. I'd also like to encourage you to take a look at future forecasts in the mobile app that Renee spoke about a bit earlier tonight. That tool projects your future super balance at retirement and lets you explore how making extra contributions today can affect your future retirement balance and income.
And Sue, Peggy, I've got some thoughts on that as well. Good news there, everyday citizen. We call this dollar cost averaging. And when it's paired with our life cycle option, making extra contributions to your super every fortnight can be a very powerful strategy. Dollar cost averaging is the practice of investing fixed dollar amounts on a regular basis, regardless of the share price. And it's a good way to develop disciplined investing habits and be more efficient in how you invest, and potentially can lower your stress level as well as your average cost per share. I'll expand on that a little bit. And let's say you make some extra contributions every month. When the market's up, your money is going to buy fewer shares. But when the market is down, your money's going to buy more. And some benefits here of dollar cost averaging: it establishes good investing habits. And even though you know you should be investing regularly, sometimes it's tempting to spend money earmarked for investing on other things. And if you set up regular, automatic extra contributions, you're less likely to miss the money you invest, and more likely to develop investing discipline, and more likely to stick to your retirement plan. For super, just a reminder that there are caps on the amount you can contribute. And if you go above these caps, you may end up paying extra tax. It keeps you open to opportunities is another advantage here. Market timing, trying to predict and pinpoint precisely when the market will reach its peak or hit its bottom, buying or selling accordingly, almost impossible to do. Dollar cost averaging helps ensure that you're going to be at the door when opportunity knocks. And just a quick example on that: if you stop making extra super contributions in April of this year, 2024, when uncertainty about inflation drove markets down, you may have regretted your decision in the months that followed as the market surged there to some all-time highs.
Thanks, Peggy and Duncan. Duncan, just staying with you for this one, could you detail how the fund's performance over the last fiscal year aligns with the long-term financial goals? And what are the key risk management strategies in place to handle potential market volatility in the next 5 years?
I love this question, Sue, and a great opportunity for me to go back to our core investment principles. We are thrilled with Vanguard Super's performance in its first full year and think it really helps validate our investment approach. And performance exceeded expectations largely due to some outstanding equity returns in the period. But as we've spoken about, Super is absolutely a long-term asset. It's not about timing the market, it's more about time in the market. And part of having a successful long-term investment approach is your ability to maintain perspective, discipline, and a long-term outlook to sustain those short-term periods of volatility and keep progressing towards your financial goals. So don't read too much into those one-year performance numbers. And perhaps turning to the second part of that question, when it comes to navigating potential short-term market volatility, Vanguard has several layers of monitoring and uses risk controls to ensure portfolios track their indices and target strategic asset allocations appropriately. And Vanguard's portfolio managers work within some strict policies and guidelines. Our experienced investment team stands ready to handle market volatility when it inevitably comes. And we're there to rebalance your life cycle and your diversified options back to target if markets move materially. And equity valuations appear stretched in the US, and they delivered some handsome returns this last year, but we are not making a market call. And to be clear, Vanguard Super does not employ short-term tactical strategies where we try to predict and time the market. Vanguard's life cycle and our diversified options are designed to manage through market downturns by staying fully invested, and we use diversification to mitigate the risk. And Vanguard Super is designed there to match our clients' long-term risk and return objectives and succeed over those multiple market cycles. And this means we always have an eye to the many possible futures and market conditions that lie ahead and can maintain that all-important long-term outlook.
Thanks, Duncan. I've got another question for you. A member is interested to learn more about our approach to investing in foreign stock markets, especially in emerging markets such as China, India, and Vietnam.
Great question, and when I think about that, my mind goes to the importance of diversification in building a robust super portfolio. And intelligent diversification isn't just about investing in a bunch of different things, but rather investing in assets that respond differently to the same factors or phenomena. And that's where international emerging shares really shine. And that's why we have small exposures to emerging markets in the life cycle and diversified funds. For example, if Chinese equities are zigging when other global equity markets are zagging, adding China exposure in a broadly diversified super portfolio in the right small quantities could reduce overall risk or let you increase your returns without taking on more risk. And other lower correlation equity markets like India can provide some real valuable diversification benefits too. And the behavioral benefits of diversification can outsize the financial benefits. During volatile periods, investors with under-diversified investment portfolios often feel pressured to make rash decisions when their concentrated strategy produces poorly. At the end of the day, good investing isn't about earning the highest returns every year, because the highest returns tend to be one-offs that can't be repeated. It's about having trust in the growth of global financial markets and earning stable returns that you can stick with, which can be repeated and compounded for the longest period of time. And one of my heroes, Nobel Prize laureate economist Harry Markowitz once said, diversification is the only free lunch in investing. And his assertion has stood the test of time for many of us. And as we look at international and emerging market equity exposure in super portfolios, that can be an easy win.
Thanks, Duncan. Renee, I've got another question here from a member regarding our online functionality. They have asked if the unit rate and fund values are available online to assess how much the unit price is daily.
So unit prices for all Vanguard Super investment options except for life cycle, they're available on the public website. These are updated on a daily basis, and Just select performance and fees in the menu and then click on unit prices. The lifecycle investment option, it's a little different as it doesn't have a single unit price. This is because lifecycle is invested in a number of underlying investment options, and each of those has its own unit price. However, you can see how many units you hold in each of the underlying investment options in the mobile app or the web portal. If you just select Manage My Investments in the menu and click on Details, and you'll see there your units listed alongside your investment allocation. Of course, if members have any further questions, feel free to reach out to our client services team. They'll be able to assist.
Thanks, Renee. I'll stay with you for this one. We have a question about how the take-up of our new retirement products is going.
Yes, so we're thrilled to launch 2 pension products in December last year. This means we can now support our members through their entire journey when you're saving for retirement, during your transition for retirement, and when you start to draw down a regular income once you're retired. So look, it's early days for these new products, and we're really pleased with the take-up so far.
Thanks, Renee, and thanks everyone. We've covered the key topics and themes that have come through in our member questions, and I'll conclude our Q&A here. Just a reminder again that we'll be publishing responses to questions that were not addressed tonight on our website in the coming weeks. Peggy, I'll hand over to you to close tonight's meeting.
Thank you, Sue, and thanks to Renee and Duncan. Thanks also to our members for your questions, and we appreciate your interest and engagement across so many topics. The Q&A session is an important opportunity for us to learn about what matters to you when it comes to your super. And I trust we've been able to provide you with some clear information and have addressed your questions. We recognize, as Sue said, we weren't able to get to all of them tonight, but we'll address the outstanding questions as part of the meeting materials that will be available online very soon. You will see on the screen a feedback form. There are 6 questions. We'd appreciate it if you could take a moment to complete the survey. And as we've said several times today, your feedback is important to us and would help us to improve our next member meeting. We'll also provide a link to the survey in an email, which will be sent to you shortly. If you have any questions about the meeting in the meantime, please reach out to the team. And speaking of which, thank you to all the team who helped organize tonight's meeting. The annual meeting, member meeting is a significant event, and we thank you for your efforts in bringing it to fruition. That brings us to the end of tonight's proceedings. Thank you, everyone, for joining us. Good evening.